Hello and welcome to the Gold and Silver Club end of week review US non-farm payroll special today on the 6th of December 2013, presented by myself, Phil Carr, and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will cover an end of week summary for gold, silver, oil, natural gas, and the commodity currencies. We'll be reviewing the top trades of the week, providing live market commentary and technical analysis, and also look at the week ahead. So key events looking forward, especially with focus on today's non-farm payroll, and of course, answering any questions you may have too. So this week, the price of gold, we've seen some interesting moves actually. We'll have a look at that very shortly. Before we do so, the big fundamental news today, traders anticipating the December tapering ahead of US jobs report. So the most important US economic report of the month is the US jobs report for November. The Department of Labor will release the latest employment data at 8:30 a.m. Eastern Time and 1:30 p.m. GMT. The general consensus is that the US economy created 185,000 jobs and the unemployment rate edged 0.1% lower to 7.2% in November. So the first take on October's data revealed 204,000 persons were hired, while the jobless rate rose a notch to 7.3%. So earlier this week, the ADP US National Employment Report showed private employers hired 215,000 workers last month after a revised gain of 184,000 private sector jobs. And even though the ADP report and official data tend to vary substantially, sometimes the figures encourage traders to expect a substantial surprise on the upside of the consensus. The two likely scenarios traders can expect today, it's a better than expected reading, above 185,000 jobs, general consensus, with the unemployment rate dropping to a post-crisis low of 7.1%. This scenario would bring the 6-month average of payrolls to the highest level since the summer slump. This outcome would be bullish for the US dollar and certainly bearish for the precious metals. On the flip side, a weaker than expected reading below 185,000 jobs, general consensus, will be viewed as bearish for the US dollar and bullish for the precious metal prices. So either way, the report will help to answer some of the most pressing questions about the US economy and provide traders with clues on whether November jobs data is strong enough to push the Fed to taper in December. So that is the key news which we are waiting on today. So before we start and we have a look at the top trades of the week, we will definitely go over some live technical analysis. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world: gold, silver, oil, natural gas, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, a professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. Through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, and tools that give any individual the definitive edge to trade in any economy, and also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's a little bit about ourselves and the Gold and Silver Club. So what we'll do now, we'll take a look at the price of gold this morning. So gold's looking pretty interesting. It's kind of in the middle of its recent consolidation range. So we're at $1,229 an ounce. So we will take a look at the live charts very shortly. The US dollar index as well is looking very interesting. So we'll take a look at that shortly as well, which moves the inverse typically to gold and silver. So first of all, the top trades of the week. Well, there's been a lot of day trading opportunities this week. So we'll take a look at those on gold, silver, and also oil as well, using the signature Gold and Silver Club strategies. So first off, this was from Friday. Actually, the Friday close, we had a really nice opportunity to enter into a short position. We keep finding resistance around the 1250 to 1260 level on gold, and we certainly had a nice signal again to sell short on Friday. Entered at 1250, very tight stop on that, 50-point stop for gold, $500 risk on that, and we just came down and hit our profit target 1219 for 310 points on Monday. So that was a nice quick move for $3,100 for a 6-to-1. So the risk to reward on that was great. So that was Monday's trade. We then had WTI, which finally broke out. We're actually just hovering around 97 still at the moment. So watch that on non-farm payrolls. WTI, we had a breakout from 96, came up to next Fibonacci level there, 97. Very simple trade. Profit was 95 points on that breakout. Risk was 50 points, so $500 risk for 95 points profit for $950 profit for each lot traded for a 2-to-1 risk reward on WTI crude oil. Gold, we then had another opportunity midweek to actually trade the breakout. So we had a consolidation and then we broke out to the upside back above. We're right in that consolidation zone at the moment again now. We broke above $1,229 an ounce. Spiked up to 1,251 again, that same Fibonacci level, and we've sold off again from there. So it's pretty straightforward trading at the moment between support and resistance. So with that, we just made 60 points was the risk on that trade, $600 risk for each lot traded for 210 points on the day trade. Reached that very quickly within 4 hours. So that was $2,100 profit for each lot we traded for a 3-to-1. And then we had the same again. So gold then provided another sell short opportunity, this time at 1242 on the 4-hour time frame, came back down to another key support at 1222, where we exited for 200 points, 75 point risk, so $750 risk for 200 points profit. So for $2,000 for each lot traded for a 2.5-to-1 risk to reward. And finally, natural gas. This was beautiful. This was yesterday. Just on the natural gas inventories, we did get a breakout. We were looking forward to trade this potential breakout, and we got in at 4.011, and we just came up and we hit the Fibonacci with pinpoint accuracy there at 4.128 for 117 points. So the risk on that was 35 points, so $350 for each lot traded for 117 points profit, so $1,170 profit for each lot for a 3-to-1 on natural gas. So those are our top trades of the week across gold and the energies. So hopefully you can see that all of those trades were in and out pretty much within 24 hours there. So lots of day trade opportunities this week. What we'll do, let's go across to the live market. So what I'll do, I just want to bring up the US dollar index first. We'll take a look at that. Okay, good. So you should now be able to see on my screen just the US dollar index here. And what I want to highlight to you at the moment is the US dollar index yesterday did sell off significantly. This was very supportive for gold. We can see here we've actually closed down. We've come and closed down below the 50-day moving average, which is quite important. We found we did break through this support at 80.40 on the US dollar index. On the daily time frame at the moment, we're looking bearish with this inverse hammer currently on the daily. We want to see today whether the US non-farm payroll is going to provide support for the US dollar. So if it does provide support and we see a turnaround, we could see a move back, be supported by the 50-day moving average and a move back above 80.50 here, back into that consolidation zone. However, if we get very negative news for the US and the US dollar, we could then break yesterday's low, and this will give us further confirmation to short, because we are looking technically short here. We're closing below the 50-day moving average, had a big move down yesterday around the 80 level, and this could really start to provide some interesting moves lower here. So if we do get negative news coming out of the US, what we'll be looking at is a breakdown of the US dollar to something like this to occur. Not a lot of support until about 79.90 level here. This is where we could come to, and that will be very supportive for gold. So let's take a look at gold and see where we are at on gold at the moment. So you can see the 4-hour time frame has provided us with so many opportunities to essentially go short and go long. You can see really this market is struggling with the 1251 level. So 1251 is a Fibonacci level there. With pinpoint accuracy, we've hit that level several times. It is very much a sell zone at the moment, a resistance level. You can just see that very clearly on my charts. If I just highlight that to you, this is the sell zone at the moment on gold. And then we do have further buy zones here. Certainly we've got one zone here which is a 1228, which is providing nice setups, and then below that we're really struggling at the moment just to really break through, to have a confirmed break below 1200. So it's around between the 1210 level up to 1219 here. These are the zones really where you want to, these are the event areas for gold at the moment where you can find opportunities. So what we'll be looking at today, we're at 1229 at the moment. So will we get the US dollar tank, and will we see gold just spike up and come back up to the 1250 zone and see how it reacts there? If we can get a confirmed break here and just clear 1260, this is where we could be in for some nice moves to the upside on gold. So this is where we could really start to see a lot of buying pressure. We start to work our way out of the recent lows, okay? So that's what we'll be looking for if we can get a really confirmed breakout. Obviously, there will be a trade here as well, which you have to be pretty quick to take, which will be from the 1230s up to the 1250, which will give you about 200 points if we get that kind of a move. If the move is very bullish for the US dollar index and the US dollar in general, we'll be looking for a move lower here back down towards 1200, in which case, if we can take out the weekly low, which will be about 1211 here, we haven't got any major fib levels until 1180. So we'll be looking for a 300-point move lower. That would be quite enjoyable as well to trade that, because you'll see a lot of stop losses get taken out if we break below the 1200, and we should come very quickly down to 1180 and possibly much luck and break 1180. But 1180 is a good profit target. That will give you 300 points on the downside. So we are some key event areas on gold at the moment. Whilst we're in this consolidation between 1210 up to 1250, there are opportunities to just buy and sell within that range. But we normally on non-farm payroll, FOMC announcements is where we can break a consolidation. So that's what we'll be looking out for on gold. One market to take a look at now, which is looking very interesting also, where we had the nice breakout yesterday, is natural gas. Looks pretty interesting as well. I'll go on to WTI oil shortly as well. Natural gas. So we had the breakout yesterday from the natural gas storage inventory. So that's a very tradable news announcement every single Thursday at 3:30 GMT, natural gas inventories. Yesterday we had a huge spike up. You can see where we took the breakout there, 117 points that was worth. So if you're not trading that already and you do like trading the energies, natural gas announcements are definitely worth trading. We'll see whether we're going to get this resistance level here at 4.129. We want to see whether this is going to provide a sell short opportunity. You can see there's a inside candle forming here at the moment. We want to see if this is going to provide potential shorting opportunities to come back down again, to retest previous resistance level there at 4.00, or whether we get a breakout. So if we get a breakout from here, we've got quite a nice move again. We could be, the next Fibonacci level is not for about another 180 points above. So natural gas is definitely going to be one to watch today as well. Let's move over to WTI oil. Yeah, WTI oil, we're waiting, really stalled yesterday. So this is evidently waiting for some, non-farm payroll news this afternoon. We're just dancing around this 97 Fibonacci level at the moment. This is where we got the breakout this week from 96 to 97. You can put that on the daily. You can see a lot of indecision there as well. The reason also we're struggling a bit, we're at the 50-day moving average there. You can see market is just trying to determine whether they want to sell off from this level or whether it's going to break out from here. So a sell short opportunity from here could just take us back down. You can see there's an inverse hammer there anyway on the daily. We could, if that gets confirmed, we could just see the market come back down or retest previous. That would be quite a nice trade actually. Just come down and retest 96, possibly lower if it really tanks. It takes out stops down to 95. Or if we can get a breakout, we can really start to close above the 50 MA, be looking at 99 level, which is 150 points above where we are at the moment. So we're at an event area for WTI. Watch that definitely today. I think we're Fridays is typically very busy for oil. So you will see, no doubt about it, some volatility today for oil to trade it. Brent market as well, very choppy at the moment, but still remaining bullish. You can see they're just draw a very clear sort of trend channel forming on here for Brent as we continue to work our way up here. So on Brent here currently, we'll be looking, for more potential buy opportunities where we are at the moment. We did get some smaller buy opportunities on the 4-hour time frame yesterday. think WTI has got more to offer where we are from where we are at the moment, more clear in terms of the signals, but we'll be watching relations on Brent too and see whether we're going to stay within this channel. And if so, are we going to get a move just back up to the resistance zone here and test 113, so $113 a barrel would take us about another 200 points higher. So Brent is going to be one to watch today as well. Let's look at silver. Silver, we're going to have a similar situation really to gold at the moment. So silver on the daily looking very much in a downtrend still. You've got a channel here. And normally we don't really clear these trends until some significant news, such as non-farm payroll. But we're still stuck within a downtrend here on silver. It's still struggling to get above some key MAs on the daily time frame. We did take out weekly lows this week, so we did actually come all the way down to almost to test the July lows, but we certainly tested 3-month lows here on silver. So we're going into the 4-hour time frame just to get a bit of a better view here on silver. So silver, again, this is going to be, we're going to get a clearer view on silver during the US non-farm payroll announcement today. So if we do get a very strong US dollar strength, we get strong numbers come through, we'll most likely see silver come down and come back to the lower end of this trend line, this trend channel. And if we can take out the weekly low and $19 an ounce again, we've got quite a way lower here, down to 18.19, which would be the yearly low, actually a 3-year low for silver. We're not that far away. We're only about 100 points lower. And if we take that level out, we'll see a lot of stops get hit as well. And we could see some big moves lower before a capitulation, where we'll probably see suddenly a lot of buying come into the market. So we'll be taking a close eye on that on silver. You can see just on the 4-hour, the very clear trend. On daily here, it's looking bearish, to be honest, on the daily, but if we can get a breakout of this this downward trend, if we get the US dollar index is tanking today, we will then see silver break to the upside. Copper has been strong, so we're really wondering here, is copper going to lead the metals out? Because they did. Copper was the first trigger this week when we saw gold certainly spike yesterday to the upside, and then earlier on in the week as well. We've just been chopping, very consolidated on gold between support and resistance, but copper has just come up to, it's just come up above its 50-day, closed above that now, 50-day moving average. You can see we're at another key MA at the moment. And we are just keeping a very close eye on copper just for the correlations, because copper can sometimes give you the move just before the other metals will follow suit. So copper looking bullish here on the daily time frame. You can see Dragonfly Doji yesterday got confirmed, had a move to the upside. Copper here needs to do a bit of work to get above the 200 MA, and then we'll be looking at 3.296 as the next resistance and 3.350 just above that. So we'll just break it down into the 4-hour, and copper, you can see they're just working its way up over the last week or so. So we're keeping a close eye on copper as well, because that gives us a good indicator. We see this spike and come up to 3.296. We could see this would be very supportive for gold and silver too. Now, the other one, Australian US dollar, which is looking very interesting at the moment as well. We've been having a lot of sell short opportunities on the Australian US dollar since it broke down. This week, it actually broke all the way down to, again, similar to gold, 3-month lows. Australian US dollar and gold very strongly correlated. Came down to 0.899. If we can take out the weekly lows, we could see quite a nice move lower here on Australian US dollar. We'll have at least, probably I would imagine, about a 100-point move lower. And that will be a really nice trade to take if we can take out the weekly lows here on Australian US dollar. However, if we find support, so looking at the 4-hour time frame, we've got a very clear support level on Australian US dollar, which has now become resistance. You see that? So potentially there are opportunities here to sell off now this new resistance. So support has become resistance. What we can do here is just look for opportunities to just sell short and come back down, especially if we can get very bearish news for gold. We'll see that correlate with Australian US dollar. On the flip side of that, because we're at an event area, we could see a breakout here. If we can break really above this consolidation zone, if we can break above weekly highs here, this is where we could come up and see a retest of the 9.1. It should just be around also previous resistance from this week. So we could see a move higher, a breakout higher, which would give us circa about 70 to potentially 100 points to the upside. So indecision, obviously, at the moment on Australian US dollar ahead of non-farm payroll. For me, this is definitely a key market to watch during non-farm payroll as well because of the close correlation to gold. So keep an eye on that as well. And yeah, those are really the key markets that we want to review at the moment. So what I'd be saying, what we would be looking at, gold. So just as a summary there. Okay, US dollar index at the moment, keep an eye on that. It's looking very bearish, closed very bearish yesterday. Got an inverse hammer here on the daily time frame. So if we get a breakdown of the US dollar index, that's going to be supportive for the Australian US dollar, for gold, for silver, and for copper as well. So if we get a breakdown lower, that's what we'll be looking at, potential, we're looking at buy opportunities on the metals. Of course, you can trade the US dollar index too. Directly. If the US dollar index is supported and we get a rally to the upside, then that's going to be bearish for Australian US dollar, gold, silver. So that's what you want to then have a look at your short sell opportunities and have your alerts go off. Certainly if we can take out weekly lows for gold and Australian US dollar and silver, because then we're going to trigger a lot of sell short pending orders. You can make money faster when the markets fall than when they go up, just because so many stops will get triggered and then you'll start to get panic in the market and you can make a lot of money quick, especially on non-farm payroll. So be aware of that and be ready for that. Natural gas, so the energies really like this. We're an event area, we're either going to break out to the upside or we're going to get a full retracement back to yesterday. So natural gas for me is definitely going to be very tradable today. And then WTI, again, we're at an event area. Are we going to break down lower, come back to 96 or break up to 99? So you've got, some really good potential trade opportunities here prior to the news. Keep an eye on those markets. Those are really our top picks for today. And of course, Australian US dollar. Keep an eye on Australian US dollar too. So let's have a look at what key news announcements, not just today, but we've got moving into next week too. Okay, so today, of course, we do have non-farm payrolls. That's going to be at 1:30 p.m. GMT. So 1:30 p.m. GMT and 8:30 a.m. Eastern time, we've got US non-farm payrolls. That measures the change in the number of people employed during the previous month, excluding the farming industry. So job creation is the foremost indicator of consumer spending and economic activity. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. And that, of course, is important because the US dollar is inversely correlated to gold price, as just discussed. Then today, later on today, at 2:55 p.m. GMT, 9:55 Eastern time, we have the US Michigan Consumer Sentiment. That index rates the relative level of current and future economic conditions. So there are two versions of this data released 2 weeks apart. The preliminary data tends to have a greater impact. A higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish for the US dollar. Then moving into next week, we have the all-important US crude oil inventories, very important for your energy trade. So if you trade crude oil, WTI or Brent, this is a great trade announcement to trade every week. So 3:30 p.m. GMT, 10:30 a.m. Eastern time, the data reports the number of barrels of crude oil commercial firms have in inventory. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading is taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Next Thursday, we also have US core retail sales. Now, that index measures the change in the total value of sales at the retail level in the US. So it's an important indicator of consumer spending. It's also considered as a pace indicator for the US economy. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. Next Thursday, again, we have our US natural gas storage. That was great yesterday. Just got a massive breakout from the inventories. Yesterday, 117-point move to the upside. So do make sure you trade this if you are day trading commodities and natural gas. It's 3:30 p.m. GMT or 10:30 a.m. Eastern time. The Energy Information Administration provides the natural gas storage report measuring the change in the number of cubic feet of natural gas held in underground storage during the past week. So while that is a US indicator, it tends to have a greater impact on the CAD, also due to Canada's sizable energy sector, and it's important because the CAD is correlated to oil price. And finally, on Friday, next Friday, We have the US core PPI, so that's at 1:30 p.m. GMT, 8:30 a.m. Eastern time. That measures the change in the selling price of goods and services sold by producers. So it excludes the food and energy industry. But when producers pay more for goods and services, they're more likely to pass the high cost to the consumer. So PPI is thought to be a leading indicator of consumer inflation. So a higher than expected reading should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. So these are all the key news announcements really to watch for trading commodities over today and next week. And of course, if you are interested in taking your trading to the next level, we've actually just completed our international traders competition at the Gold and Silver Club. Pleased to announce Team Europe actually won that. So we've had an incredible week, an incredible month running this competition, and we would certainly encourage more of you to get involved and to learn really these unique strategies for trading the commodities. So you can find out more about our live trading room packages, also about our Gold and Silver Club masterclass and elite level packages. And if you get in touch within the next week, we are running one more workshop just before the end of the year, so you can find out more details about that. So if you'd like to find out more details, you can request information on the Gold and Silver Club live trading room and coaching programs. You can just go to www.jointhegoldensilverclub.com, or you can contact us at our London, New York or Johannesburg offices. So London office is 0207 193 0403. New York office is +1 646 808 0403, or Johannesburg office is +27 11083 8403, or just email us at office@thegollandsilverclub.com. And of course, make sure you subscribe to our newsletter at www.thegollandsilverclub.com, so you receive free weekly gold, silver, oil, commodity currency news, live market analysis, and prices. Okay, perfect. Okay, guys. Well, we'll definitely wish you luck for today's non-farm payroll. It's going to be a couple of hours. Have a fantastic weekend, and we'll see you next week, same time. Okay, guys. Take care. Have a good one. And if you need any additional details will be on the screen. Cheers. Bye-bye.